let's put the spotlight on the glittering gains that we have seen in gold that seems to be fading as prices take a breather. Now, prices of yellow metal have in fact declined over 2% in the week gone by, and that's the steepest fall since late February. Now, is this a sign that bears may be taking charge in the asset class? Let's go across to Kunal Bothra, who is here to put the moves into perspective. Kunal.
Thank you so much for that, Srishti. So I think we should be ready for that bright yellow gold to now become a little bit more light yellow gold, looking at the way the charts are panning out. So the charts for gold, where we looked at the last, 4 to 5, attempts where the RSI for the gold prices have hit back into those zones where it was extremely overbought. So this is the gold prices on the dollar terms. This is the RSI indicator. Now, very interestingly, multiple times whenever gold has actually made a top, and top is just a medium term time frame, is where the RSIs had hit zones which is closer to this resistance trend line. So as you can see, so it started off first in 2006-07 where gold prices actually topped out over here. You saw the initial zone of resistance coming out from the indicator. That led to almost like a 1 year of sideways or a negative trend for gold prices, where it plateaued out and the asset class remained more in a range. Then a similar thing happened in 2008 where gold prices topped out. This was a point where gold, from here on fell into almost like a 1.5 year of correction. This correction was almost like a 30 to 40% correction on gold prices. Same happened in 2020 where gold prices start to go into a corrective phase, and that resulted into the asset class getting into almost 11 to 12 months of consolidation. The most interesting part is that recently when we hit 3,500 mark on gold dollar prices, we've hit that zone of extreme overbought on the indicators, which means that we are looking at a potential of the next 12 months of consolidation on the gold prices. So there should be a case where we may expect that the gold prices could drop down at least another 10 to 15% further from the recent swing highs at least.
Right, Kunal, very interesting one. And like you mentioned, the fact that from the bright gold color, it may become light gold color. I don't think most of us would be complaining on that, given the fact that hopefully if the prices go down below that 90,000 for 10 gram mark, or maybe much below that, we'll all be happy, isn't it, Kunal?
Yes, of course. On one side, it could be very, very positive. But the spooky part about the charts for prices and it topping out, it happened in 2020 start, it happened in 2008 start. Whenever gold prices have actually topped out, it's actually not augured very well for the equities also for the entire calendar year.
I'm not sure now what should I be praying for it to top out, or how should we brace ourselves for this? But nevertheless, what the charts are indicating right now is what Kunal has explained to us. The gold is pulling back from its highs, and we are seeing in the weekly performance as well. It is the worst week coming in about 2 months for gold. But in fact, we spoke to a lot of experts as well who gave their views on gold, though they maintain that over the longer term, gold looks pretty nice and bright and shiny, but maybe the near term is where the concern lies. So here are what these experts have to say.
I think gold could have a big correction at any time, but I think gold will be higher in a year's time. I would advise people with long positions in gold to continue to hold and just take profits at the margin. Obviously, if you own gold on leverage, you should take some profits, but gold's trading very well.
So what we were trying to say with the gold long was that, bad behavior has its consequences, and people start to lose faith, especially in the currencies that central banks and governments are printing, paper money. So it was time to be much, much more aligned with the old-fashioned currency, the one that doesn't get printed out of existence, and that's gold.
I own gold and silver, and I bought more silver recently. Silver's still depressed. Those are two of the few. Well, I'm not buying gold because it's making highs. I hope I never sell my gold. I hope that my children own my gold someday. I am not selling my gold, even though it's making all-time highs.
Gold is extremely expensive in any metric. Of course, you guys all putting out this charts that, Nifty has, of course, underperformed gold for last couple of 2 decades at least. So very, very expensive for a 0 infinite bond, it's very expensive. From an allocation point of view, it's time to be sort of super concerned about gold valuations now. So I don't think it's a time to dial up gold in any meaningful fashion.
Gold is up almost 50% in the last 1 year despite the correction that we are seeing. You can't have an asset class keep going up, one way. I'm a big bull on gold, but I'm saying that it's gone up too fast, too soon. So there will be some correction, but over a period of time, I'm still bullish on gold that this is an asset class which will do well, but it can't go up 50% every year.
If you like this video, then like, share and subscribe to ET Now.